This is Robert Kraft, and I'm your host on SNN.Network. And joining me right now is Frank Holmes. He is the CEO and CIO of US Global Investors. It's a publicly traded company. The symbol is GROW on NASDAQ. Frank, it's great to have you back. How are you holding up?
Outstanding. I mean, just amazing that this lockdown, I've been so blessed to have a product like Jets come along.
Before we get into that, we've spoken before when I've interviewed you for our Wall Street View Investing Experts series on our YouTube channel. But our audience may not realize that you also run US Global Investors, which happens to be a public company. So can you start off with a quick overview and history of US Global Investors, and then we'll go from there?
Well, US Global Investors started as a group of military officers that were investing, and it became so popular and successful that Colonel Aylesworth, who was a pilot in World War II in the Pacific, and he started this and was raving success because he was in South African gold stocks very early. And with that, he created this mutual fund company from an investment club. With that, USAA, which is also based in San Antonio, they had started a mutual fund company, and they got so many calls for their gold fund that they didn't have, because all the military people were calling Clark Aylesworth. So lo and behold, out came this fund group, and it became the most prestigious first no-load gold fund, and it had this spectacular volatility and growth, but it's been very volatile with the world of gold.
All right. Well, we're going to get to your thoughts on gold a little bit later in this interview. But, the main reason I invited you back on is because this past week, the firm reached a milestone for the US Global Jets ETF, Jets, which hit $1 billion in assets under management. From my understanding, this is also the only dedicated airline ETF on the market. And for the 1 month period as of June 4th, the fund is up 41.6%. So with that, can you describe the ETF a little bit more and some of the reasons for hitting these recent milestones?
Well, one of the big parts of this has been patience. Usually these assets, like an ETF, say Jets, after 3 years, if they're not $100, $200 million from big shops, they shut them down. It's amazing to see on a regular basis, they're always shutting down ideas that didn't work because it's costly to put these out there. It costs you $250,000 to basically put it on a shelf and wait. And what happened for me is this company's called US Global Investors, and we have China Region funds, we have the first Eastern European fund, we have Global Resource Fund, we have World Gold Funds, we're investing all over the world, I'm traveling over the world. And what did I notice after 2009? The boom starts, but all of a sudden there's all these bankruptcies in the airline industry, and there's a contraction of my options to fly anywhere, and the cost of my tickets are going up and up and up. And one of my directors, Tom Lyon, was saying you have to get in the ETF business. And so I said, okay, well, how do I get into it? I'm very quant driven, so I went out to create a product that was quant focused, and there was no other airlines ETF. There was one that shut down. It was called FAA. And it was just an index of names. And I want to apply a quant approach. And the thought process is called quantamentals, where you go back and you do regressional studies and you try to capture, I capture 70% of all travel in America. I capture the fastest growing regions around the world, but I basically don't get whipsawed by the EU, the euro currency volatility, or the Japanese yen. So there's a mathematical model. And so what this airlines ETF has, they call it Smart Beta 2.0. And it's not, when you buy this, you're buying Ferrari or Louis Vuitton, LVMH, because it's very quant driven. 4 biggest names are United, Southwest, everyone knows Delta, and everyone knows American. Well, they capture almost 70% of all travel in America. They're 48% of this portfolio, and they just rebalance each quarter. After that, the other remaining names, they're based on math of, do they have the fastest revenue per growth per share? Do they have the highest cash flow growth per share? Do they have the highest cash flow returns on their invested capital? And it starts to go down to these other airlines such as JetBlue, Hawaiian, etc. And then it allows you to be able to buy Boeing. It can buy airports, which is interesting. So in the US, all the airports are owned by municipalities. But when we step outside of America, in Mexico, the three major destinations for tourism are public companies listed in New York. Bangkok is public listed. Turkey is the biggest in Europe airport, is listed. Beijing. So they're always capped at 1%. So I have 20 names captured at 1%, and that mitigates volatility and allows you to get this global essence. And our bogey was to beat the New York Stock Exchange Global Airline Index. When we back tested it, did it 90% of the time on rolling 12-month periods. We went public with it. It charges 60 basis points and has done it even after fees. So it's done what it was supposed to do. And when we launched it, it was some way for me to get back all the costs. My tickets were rising from flying. And it quickly grew successfully to almost $100 million. But it was predominantly guys or hedge funds that wanted to go short American Airlines, for example, but hedge their bet with an ETF. There was another product. So it had the sort of the pairs trader and deep value investors, because the PE ratio and the cash flow multiples of airlines are 1/3 of trains and trucks. But what happened with COVID-19 was unprecedented. Two things. One were the millennials. The millennials started getting bored. There's no parties on the beach to go to. And all of a sudden they're educated, they're more informed, and they started becoming day traders and doing research. We saw Schwab announce that they had over 300,000 new accounts in the first quarter. TD Waterhouse, 300,000 new online accounts. And Robinhood also exploded, and every other online provider of accounts exploded by the numbers of millions of people started trading stocks. And what's interesting is at the beginning of March, Eric Lukanis from Bloomberg called to do an interview, and he said, Jets is the three cheapest ETFs in the world are Nigeria, coal, and Jets. And why would anyone buy Jets? And that interview went everywhere, and it went on over and over for the whole weekend on Bloomberg around the world. And that following week, we just started seeing retail coming in, and we started seeing the more sophisticated guys want to go short the airlines, but they needed a product. So we immediately had $100 million come in for guys short the airlines and wanted to hedge their bet. And then the retail kept buying all during the bottom. So saying retail investors are stupid is really a big mistake. They caught most of that 40% move, which we saw. And it's interesting because it was growing during the bottom. Buffett comes out and does a pivot change. The beginning of March, he increases airlines exposure, and then at his annual meeting in the first week of May, he said he's out of airlines totally. He become very bearish, and I've said that I would too. He's 90 years old. 82% of people that die from COVID-19 are on average 82 years old. So he's got to be very serious about it. He didn't make investments like he did in 2009. He's been very, very cash conscientious. So I understand why he was reluctant, but it was a classic boom. And what was driving it also was that if you look back in history after 9/11, when the world's airlines all shut down for a week, 6 months later, they had popped 80%. 2 years later, we had SARS in Asia, and the airlines in Asia popped 120% from the lows. And then after March of 2009, they were up 80% 6 months later. And then they went through all that machination and started off talking about bankruptcies. So what we've seen is this incredible growth. And I think today it's over 30,000 Robinhood accounts have invested in Jets.
It's one of those stories that, we talk about a lot of times in microcaps that, it takes 11 years and a day. And that's the one day that everything changes. I mean, That's really what it sounded like.
Bad news is good news somewhere. And clearly, for you want to buy housing stocks, repair companies after they get wiped out in Florida's hurricanes, but not the insurance stocks. They got to pay. So there's something happened, but no one predicted that this huge sort of entrance into online trading would take place. And there's more sophisticated millennials because there's so much data. They can quickly go and look at history and look at markets. And I also found interesting on Robinhood, on their toolbar, is gold. So there's a much greater interest in the gold. And we've seen a big increase in our GOAU, smart beta gold equity ETF, which this bogey was to beat the GDXJ, which is done handsomely. And so we see that increase also coming from the Robinhood. So if it's coming from the Robinhood and it's public domain data collection, then it's a reflection of what's happening at the Schwabs, the TD, Scott's Trades, etc.
So real quick, and that's actually a great transition to my next question, but one more question on jets and the airline industry. I mean, traditionally, you looked at the data after you saw that, after 9/11 and some of these other horrific events that happened in, globally. What's some of the data tell you in terms of time after the event to when it's at the peak? I mean, what's some of the data points out there on that?
Well, it's interesting. The airlines industry is very, very different than previous cycles. And the government agencies have woken up that it's so important to get people flying again. It's so critical for business. It's between 30% and 70% of the high margins and profits for airlines, business travel. Vegas is 90% air travel. Vegas has 200,000 empty beds and 300,000 unemployed people. Get people flying there, you have this huge multiplying effect of job creation. So there's a big push, and that's why we saw $25 billion, which is another form of unemployment insurance to make sure that people are employed, getting ready for the turnaround. And so I think that this cycle is going to be very different. And what I believe we read, I think one of the government agencies, that 1 in 15 jobs in America are related to the airlines industry. So getting it back in motion is very, very key for a booming economy.
For sure. We host an event in Vegas every year, so we're happy to see Vegas start to open up again. I mean, I saw some of the videos. They're still a little concerning to me. I wish more people were masked, but it's good to see that things are starting to open up again. All right. So as I said, you had a great transition into the gold ETF that you guys had there. As I've said earlier, we've done interviews in the past where we primarily discussed actually the firm's exposure to gold and precious metals. So how has the firm's gold and precious metals ETF, GOAU, performed thus far? And also, what are your thoughts on precious metals in the current economic climate?
Start at a big high level. 70% of all activity before the coronavirus was high frequency research, or quant funds, from high frequency trading to how they can download and read 7 10Ks and look at financials, et cetera, within a minute. You can't pay, a human being can't digest and look at ratios, et cetera, that fast. Every filing that goes in with every government agency is being data mined. So we have a brand new world. And so what we found is that the generalist analyst is a much more significant investor than just gold analysts. And so when I go to the gold conference, I speak, I give presentations to all the CEOs of where I'm seeing things. What I'm really seeing is quant driven. Sentiment, word choice is very important. There used to be old research that said, had these 7 things in your headline, your stock fell 27% over 2 weeks. It now happens in 2 hours. It's all been programmed into a code that if it's in your press release, guys immediately, quant funds will short that stock and it's all over. And it's a hard punch and it takes a while before it repair. It's recognizing that the journalists are so much more significant. And what do they look for? They don't look for the normal narrative that gold analysts would sell a gold fund manager. They are now looking for that revenue momentum of last quarter or 4 quarters. They are looking for cash flow to be aligned with last quarter or 4 quarters on a per share basis. A lot of the big cap gold stocks have destroyed because they've done dumb deals, mergers which are not accretive on a revenue per share or cash flow or reserves per share. So you could see that if you separate those stocks from the quantitative analysis and you focus on high grading those that really protected the revenue and growth per share, they far outperformed. Like Kirkland Lake, it made Eric Sprott $1 billion. How? Well, it had the highest revenue per share growth over 3 years in North America, and cash flow per share growth, and it was the quants that are all of a sudden buying into those names. So we launched GOAU, and we said the GDXJ is a 40% dilution on a per share basis. Let's take a look at high grading, and the best way to high grade was royalty companies. So 30% of GOAU are the 3 big royalty companies, and after that, the companies have to have a free cash flow yield. And you're now seeing Newmont and Barrick talking about the story that they have free cash flow. Yamana, they have free cash flow. Very important. And what happened this past quarter is very pivotal, because it was the 3-year number of the gold stocks on a per share basis all of a sudden starting to outperform the S&P 500 stocks. Now coronavirus comes along, all their free cash flow is wiped out. The best performing stock is Newmont. It's got free cash flow. It's the generalist buying Newmont. It's the generalist buying Barrick. Big liquid names, but have free cash flow. So it's recognizing it doesn't matter if you're small cap or big cap, are the CEOs, when they want to do a merger, are they really paranoid and conscientious about the value metrics on a per share basis? That's what GOAU does. Now what I think is going to happen for the microcaps is that they're going to have to protect the reserves per share. And we've noticed that if you buy a bunch of Vancouver stocks and the values of those that have the biggest bounce out of the bottom had the most reserves per share.
You know what's really interesting about both these ETFs that you guys are, have had some traction in the last few months, is that it's almost like they appeal to both sides of the type of investor that I've been seeing, out there on FinTwit. On the airline side, you did mention that some of the institutions, they see it as, a short hedge, but on the retail side, it's people who are more or less bullish on the economy, right? That they expect there to be some type of, at the very least, a government bailout for the airline industry. They know travel is going to come back eventually, so it appeals to that kind of bullish investment. But then on the gold side, usually that's people's hedge against some sort of economic collapse, right? So it's pretty interesting to see how you've been seeing the traction in both right now.
I'm very fortunate. I never expected this type of an outcome. And I'm surprised that GOAU is not a bigger ETF, because it's just done what it said it was going to do, and it goes down to $200 million market caps. I've been working on it for years now to try to find something that could do micro exploration companies, but it's the amount of hard comes in. If the money comes in quickly and you try to deploy it, you end up moving the market. It's really not because of the reserves per share. You destroy those metrics because so much money will come for those high numbers. But if you have 10 or $20 million, you can really make a lot of money. It's really interesting by being quant driven and having discipline. I won't buy more than 50 gold stocks that are exploration, that will only do those that have the highest reserves plus cash above their burn rate. And as soon as they do something stupid, they don't find reserves, they get kicked out. If they find reserves, then it adds value, cash in for an ounce. So there is a way to do it, but you can't do it with like you can do with jets.
Oh, it's so, I feel for you, because it's so difficult. Look, I've done enough interviews with the Brent Cooks and Rick Rules of the world who, go and look at every single mine, where that's really difficult, because look, you're also very much relying on the results being accurate, them telling the truth, that there are actual reserves there. And more often than not, we know, we've been in this long enough to know sometimes it's just they're not what they say is in the ground.
Sure, and it's a high risk business. So you have to get people that have this sort of adventure capital attitude. And that's what we saw in the crypto space. A couple of years back, before Bitcoin it went up to 2017, before it peaked out, and went through that winter, you saw a lot of speculative money go into these new cryptocurrencies. And actually, a lot of that money came from the money they made from Bitcoin. And they rolled that over into the new adventures. And I think that crypto winter has wiped out a lot of bad characters, which is good. The SEC has done a good job going after people making promises, not really articulating the risks of what they're doing. And then when we make our presentations for GOAU, we always articulate, here's the DNA of volatility. Understand it. On a daily basis, the DNA of gold is the same as the S&P 500. And it's almost the same over 10 days. But Bitcoin or Ethereum is 5 times greater. Silver is 1.5 times greater. So life is about managing expectations. And if you can understand that volatility, then you can participate with an exploration company, and biotechnology are the same as gold stocks. So gold and biotechnology, gold stocks are 3% daily volatility is normal, 1% for bullion. And when you go crypto, it's 5%. Can you stomach that volatility? And that's the biggest part, rather than saying, I promise there's going to be gold in the ground, or I promise there's going to be, you'll make a lot of money on this coin. That's all BS. I'm happy they cleaned out a lot of these unethical characters that are out there. But to me, what's interesting is that these crypto kids want to trade 24/7. And they get bored on a bad date, and there's no hookup for Tinder on a Friday night. So all of a sudden, they're going to go trade crypto. That was my experience, and I did not know about Tinder. My godson was telling me all about it and how successful it was. And I met some of these young kids in New York, and that's how they function. They wake up Saturday morning, they're trading in South Korea, arbitraging with this place. It's a different world. And so we saw a lot of that speculative money, like $5 billion that normally went into junior microcap biotechnology, mining, oil and gas, was gone. It became dormant. And so I think you're going to see a shift of young guns coming into looking for the next Tesla, looking for the next exploration gold discovery.
So, again, this is a good transition because, the firm also does have exposure to cryptocurrency via its investment in HIVE Blockchain Technologies. So can you explain your thesis here?
Well, HIVE, I couldn't launch an ETF. I quickly understood why with the SEC, that this idea of anti-money laundering laws. The last thing they wanted to have was to find some crypto hacker, got paid in Bitcoin, and it was then bought by the ETF list on the New York Stock Exchange. Okay, so that was a no-no. And same thing when I went to Canada, same sort of pushback on it. And so I had this knowledge, and friends of mine in Vancouver said, we've got this idea, would you know anything about the crypto space? And I did. Fortunate for my son and godson were bombarding me with this new information and attending these conferences. Is another thing that shocked me. The gold conferences like Cambridge, et cetera, they're free. They're charging $2,000 and they have 2,000 people showing up. Where are these kids getting all this money showing up with their knapsack? And oh yeah, this kid made $2 million on his Bitcoin and Ethereum investments. So it's a complete different audience. But I found out when you're mining Bitcoin, Ethereum, you're mining what's a virgin coin. It's a new coin. So when you validate a transaction in crypto space, you get paid in that new Genesis coin. It's never been touched. No money laundering problems, no KYC problems. They're more valuable because they've never been touched. So I said, okay, we can't launch an ETF. Let's put $5 million into this adventure and launch HIVE. And it ushered in, it was the most successful launch in Canada. It ushered $1 billion in. Novacrats came in, went public in Canada. $1 billion was funded. We raised $200 million over 3 tranches. And we became the biggest crypto mining company. And then the winter hit us. And then I had to become the CEO, the interim CEO, and I had to clean up things, with corporate governance 101, and got it done basically almost a year ago. And we've now mining Ethereum very profitably in Sweden. We dropped our cost by 70%. Now we've taken over Iceland again. We dropped the cost there by 50%. We mine Ethereum for $140, say, in Iceland and $130 in Sweden, and we're selling it today at 240. It's a nice cash flow business. And during the coronavirus, we made an acquisition in Quebec. So we started our own Bitcoin mining, and we're slowly building that out. We made money in the first couple of weeks until the halving took place. But the business is growing, and we'll be able to expand our Bitcoin footprint. And we're the most liquid name in the crypto space. So HIVE Blockchain trades over the counter in the US and trades in Canada. The ticker is HIVE.
So Frank, with that, from what you can tell us, what would you say is your vision and your goals for the company for the rest of 2020?
It's creating themes. It's understanding of Jets as a theme. And HIVE is a theme. It's my safest way to be involved in the new crypto world. And so it's and crypto is the for real and blockchain. I go to Harvard every year with a group of CEOs from 180 countries, and only CEOs, and we spend a week. And 3 years ago, it was 5% blockchain crypto. 2 years ago, it was 15%. Last year, it was almost 30% was on digital money, digital transfer of collection, how Ethereum is so important, the blockchain world. So it's a major trend. And I believe that by being in that early thing, I can create economics for my shareholders. And that's my biggest part is making sure GOAU participates in that. And that's why they have 10 million shares of HIVE. And they can participate in that sort of secular change that's taking place globally. I was the first to launch an Eastern European fund because I saw the EU being created and you were going to become a huge economic bloc, and that the highly educated Eastern European countries, you could buy these economies that are highly educated people for 1/3 of Germany. And so that became a $4 million idea, became a $1 billion fund. And so it's understanding that. Gold is another interesting phenomenon because gold is not just the world is coming to an end. That's the fear trade. It's only 40%. 60% of gold is love. It's love, love, love. And it's highly correlated to the GDP growth in China and India, which is 40% of the world's population. And when you throw in the Middle East and in Southeast Asia, then all of a sudden you're pushing 60% of the world's population. And I'll give you a great piece of math. 30 years ago, the footprint of India of buying gold was like 10% of consumption for that love trade. It's now 60%. So I don't believe that China's going away, and I don't believe India is going away, and I believe that their GDP per capita is now the biggest in the world. When we take a look at US, China, and India, it's a phenomenon that's not going away, and their accumulation of gold has to do with love, birthday gifts, whatever you have, they buy gold for. And I see peak supply in gold, finding new mines, etc. I think we're going to find many mergers taking place in this gold cycle. So I think gold is a very, very intriguing, and now with zero interest rates around the world, the G20 countries have a cartel of finance ministers and central bankers, and they collectively don't fight with each other. My currency is better than yours. They all agreed to zero interest rates and negative interest rates, print the money, keep the global economy going. So that has always been good for hard assets. Art, like Andy Warhol, original prints, they've gone up dramatically in value, and just like gold.
Well, we're there. Frank, where can my audience go and find more information about US Global Investors?
usfunds.com. It's really simple. I publish every Friday the investor alert. It's free. We have tens of thousands of readers in 180 countries around the world. It's a very comprehensive but concise on gold, on Asia, and also what's driving Europe. And then there's a Frank Talk blog that you can get information on. You can get information on ETFs at jetsetf.com. It's real simple, jetsetf.com.
Frank, it's always a pleasure to have you on. I really appreciate you taking the time. And again, stay safe. Good luck. And I look forward to our next update.
Thank you, my friend. And take care, and give your father my regards, my best.
Will do.